Chris, welcome to our podcast.
Thanks for having me.
So as everyone knows, so far we're all about strategic finance, and that's all we mainly talk about here. Chris has spent a few years at Miro in strategic finance. He recently joined Doxo, so we'll focus on his experience at Miro today. So, Chris, why don't you just tell everyone a little bit about what made you want to do strategic finance, what it was like at Miro, and then we can take it from there.
Yeah, sure. So I started my career in strategy consulting, working mostly for private equity firms and their portfolio companies, doing investor due diligence, growth strategy, flipping from one client to the next to the next. And I really wanted to make cumulative long term impact in just one company. I wanted to really get inside the guts of a company and help it operate and have sort of a cumulative long term impact. And at the time I was looking to leave consulting, I didn't know what strategic finance was. I had seen that word in, job titles in job posts, but it was a little bit unfamiliar to me. And I saw this posting for the job at Miro for strategic finance manager, and it sounded really cool. And as I interviewed and ultimately took the job and started working there, I found I really, really liked strategic finance work. So the way I would describe it is translating the future financial outcome of the company into an executable path and helping the company along the way through a financial lens to get there, right? So that involves resource allocation, um, providing insights and forward-looking models to inform decisions, and a lot of different things to, yeah, again, ultimately help create that future financial outcome.
Cool. Got it. So let's just talk a little bit more about that, because that's where a lot of people have questions around, what exactly is strategic finance? How does it differ from, maybe FP&A or more, traditional corporate finance? So when you were at Miro, sorry, um, were you, how cross-functional was the role? You mentioned a really good tad bit, which is it's, taking all this data and then turning it into things that you can execute on. How cross-functional was the role? What parts did you specifically play in? Like, which parts of the company were you involved in?
Mm-hmm.
And then how cross-functional was the whole Stratfin team across the company?
Yeah, sure. So when I joined, I was one of three strategic finance managers, and the way I see it typically done, at least in the strategic finance realm of like venture-backed startups, is usually it starts pretty small. There's like one, sometimes just one finance person, and then there's
Yeah.
like a FP&A or strategic finance lead, and then that team multiplies in size, sort of proportional to the company. So when I joined, Mira was under 30 million in revenue, and our strategic finance team was three managers and a team lead. I was one of those managers. The way we divvied it up was one person covered kind of everything sales, one person covered marketing, and one first person covered kind of our product and online self-service business. And so that's not really a typical division, I don't think. I think usually what makes sense is like you want to have your biggest cost centers covered from a strategic finance or FP&A standpoint, and then also working on modeling the top line and being able to deliver accurate forecasts there. So my role was supporting marketing initially. So it was forecasting top of the funnel, and then importantly figuring out how we do investments in growth marketing. So how do we spend money on Google Ads? How do we do that in a way that has positive unit economics? Those are some of the early projects I worked on with the marketing team, and that was about my first year and a half was just supporting marketing.
Got it. That's interesting. I too at Tala, when I joined, one of my first projects, it's still under me, is supporting our initially VP of growth marketing and now SVP of growth marketing. And so we probably have a lot of stories to share.
Yeah.
Curious, like, what do you have any sort of like 30-second, 1 minute TLDRs on that kind of work? So I'll start. Like, when I came in, we were so Tala, we're a fintech. Think of us like as a bank. We go after users that we want to loan to. Um, we were very heavily focused on understanding like the average cost of acquisition, so just classic CAC, and comparing that to our lifetime value. One thing that we moved to was from a average CAC to more of a marginal cost of acquisition, really understanding what our customers, what that last bit of spend was doing. Especially when we're spending, in like the hundreds of thousands a week, um, understanding what the last sort of like 20 or 30,000 or $50,000 spent was doing. And so that's kind
Mhm.
of how we almost operate today. We almost operate more on a marginal cost of acquisition basis and over a CAC basis. Just curious how you
Yeah.
guys did it there.
Yeah, no, what you're saying makes sense. I mean, I think you have to think about it from two lenses. There's the marginal cost of acquisition, and then there's the fully loaded cost. And they have sort of different things. They mean different things. Um, I would take a step back even further and say, in order to have a profitable business in the long term, you need to make sense of lifetime profit, right? So when your customers are generating a certain amount of revenue, how much does it cost to acquire them and then serve them on an ongoing basis, right? What is all the variable cost of revenue from acquisition to retention expansion that comes with that? And if you can solve for that, you can pretty clearly predict how profitable your business is going to be in the long term in terms of revenue and then cost of revenue and go to market costs as a percentage of that. So I would start there. And then from there, the go to market costs, everything sales and marketing, has to kind of make sense in that lifetime profit equation. And when we talk about sales and marketing costs there, we're talking about the fully loaded costs. So everything from sales, marketing, overhead, their laptops, their software tools, their travel and expense, like all of that stuff is baked into fully loaded costs. So that equation has to make sense. Within that, there's a question of what your dollars are doing on the margin. So to your point, you have these fixed costs. You have, say, you have a marketing team of a certain number of heads. You have their overhead costs that come with them, and then you have the programmatic marketing spend dollars, right? Google Ads or whatever it is, and making sense of like for every dollar we put into that programmatic spend, what are we getting out of it? But again, tying it back to this overall fully loaded cost profitability question. At the end of the day, you have to solve for that.
Cool. Yeah. I mean, you touch on all very, very important points. Very interesting. I now, along with our growth spend, also focus on our product spend and our pricing strategy. So, I mean, you broke into Stratfin. You found, the role really interesting. What are some tips that you may have for folks looking to break into Stratfin? I know you said you had a little bit of a strategy consulting background.
Mm-hmm.
We get a lot of inbound from folks in consulting, classic finance roles, some engineers, and even some marketing folks. So
Yeah.
maybe for the strategy and consulting folks, kind of like, what are some of the tips you have?
Yeah. I'll start off by saying, at least when I was hiring for folks on my team, when I was building the strategic finance team at Miro, there isn't necessarily one background that is the requisite background to go into strategic finance. As you said, there's people who go in from a variety of backgrounds. The way I thought about it building the team was I want people with a diversity of skill sets, diversity of thinking styles. So people from investment banking, consulting, traditional corporate FP&A, all sorts of different backgrounds. Though I think the one common thread, and I think my background in consulting lended well to this, is quantitative skill. So being able to do rigorous quantitative analysis, having a background where you've had a lot of reps doing that, you can get that in traditional corporate FP&A. I found that you can have people who come out of banking and consulting who maybe can get in the same amount of experience in a shorter amount of time because they've just done more reps. They may have done I think I did 50 or so consulting projects in less than 5 years. So being able to have a lot of reps where you come in and they can give you a financial model or an analysis, and being able to own it end to end, and or take something existing and make it even better. I think that that's super valuable. And then maybe to touch on one more point that is sort of not specific to consulting, but one thing that I think a consulting background lends well to is being able to synthesize information. So
Yeah.
being able to take in lots of different inputs and synthesize into in a structured way. Okay, there's this project, and um, it all boils down to that one page exec summary, and then the exec summary, breaks down into these 5 key slides that clearly demonstrate, for somebody who has a limited attention span, what they need to know. That's a skill that you really hone in consulting, and you can get in other backgrounds as well, but that's maybe one kind of benefit that consultants have. And then there's other benefits that people from banking or people from other backgrounds will have that consultants wouldn't. And maybe I'll just touch on one thing that I didn't get as much, one like maybe weak area coming from consulting. I worked for a strategy firm that was producing projects very quickly. Usually we would have 1 or 2 calls with the client. We rarely had to be on the client site, doing a lot of things like due diligences where we just have to produce answers. Um, and that like very fast speed of operating, while it can be, I guess, helpful in a hyper growth environment and a small startup where you need to move really fast, it's a good thing. It doesn't really prepare you to do the close kind of shoulder to shoulder like business partnering type work, which is really important in strategic finance and FP&A, like being able to partner really closely with a budget owner and help them make trade-offs on their spend, help sort of negotiate through contentious projects regarding their budget and their ability to hire or invest. That work, that side, I really had to develop on the job, and was not. I think for folks coming from my background or coming from transactional like investment banking, they may not be as prepared as somebody who came from say corporate FP&A and has done that business partnering work before.
Yeah, I mean, you touch on a few things there. I think um, with traditional advisory roles, a lot of the hiring managers almost sometimes flag, a more consulting or a more investment banking style role because they're a little bit worried if they have the operational mindset, working like you said, shoulder to shoulder. Um, but I mean, that can be practiced and taught. So yeah, definitely resonate with that point. I want to touch on more on the reps you mentioned. One of the big questions we get from folks outside of investment banking is how good do you have to be at financial modeling? And one of our responses is, so we obviously teach financial modeling at SFC, but one of our responses is um, it's depending on when you join, and you mentioned earlier where you can join a Stratfin team depending on what stage the company's at. But um, you don't have to be a financial modeling guru. What you do need to be, in our opinion, is a financial modeling or operation modeling guru or ninja. You're not necessarily going to build um, your company's 3 statement sheet. You may already have a version of it, or you might make it better. Um, and if you're doing some M&A work, yes, you might be doing some merger modeling or potentially the 3 statement model for another company. So just wanted to get your thoughts around that. Like a lot of folks come to us and say, "Hey, like I love finance. I love I want to jump into a tech company, but I'm really worried that my 3 statement modeling isn't that level of an investment maker."
Yeah, I would say being able to specifically do one type of pro forma financial modeling is not necessary. Like you said, like the 3 statement financial model. Um, yeah, or any kind of technical finance modeling in terms of being able to do like a DCF or anything. It's really not necessary. I'll go back to being able to quantitative skill and fundamental spreadsheet modeling skills are really important. But it doesn't like most of my work in consulting was, I never had to do like a three statement model. It
Right.
was market modeling, like modeling market sizes, and then sometimes modeling company revenue forecasts, EBITDA, cash flow forecasts. But um, there's no like one specific type of modeling. I think it's more the fundamental skill that matters. And then you can take those fundamental skills that you've developed, and you can learn to apply them to new scenarios. And every business model is going to be different. You might join a company where they have a corporate FP&A person who is like, or their head of finance who has a three statement model, and that's not what they need. What they need is a top of funnel forecast to
Right.
forecast web traffic to user conversions or something like that, which is what I had to do when I joined Miro, and I had never done anything like that. So I'd focus more on the fundamentals rather than the specific content.
Cool. Got it. Yep, that makes a lot of sense. Um, let's talk more high level.
Mhm.
What are some things that you really, really enjoy about StratFin? And then my follow up to that is, what are some things that you don't enjoy?
Yeah, sure. So I think what I enjoyed most maybe in my last 4 years at Miro was building forward-looking business cases, right? That highlighted an opportunity for the business, and that's really one of the coolest things that you can do in strategic finance. Strategic finance is very close to FP&A, and the two terms are sometimes interchangeable. But the way that I think about strategic finance is you're like a super FP&A team. You're like the FP&A team that does all the core reporting and budgeting and sort of the mechanical FP&A stuff, but you're also this like strategy unit within the company that can identify forward-looking opportunities and inform investment decisions. And because you've done all that core FP&A work and kind of all the dollars and cents of the business, you're in a really good position to do that sort of strategic business case work. So I'll give you an example. At Miro, we launched a sales team to cover LATAM, to cover Brazil and other countries down there. It was not something that was in the plan at all. Like we hadn't budgeted for it, but we were able to, with our strategic finance team, see the leading indicators of demand in those countries, in the data in our product, that gave us the signal that they would be receptive to enterprise sales. And then we piloted it, with sales reps who spoke the languages, selling out of the U.S. And we were able to get a lot of traction there. And then we were able to scale that through more reps. And that was totally a strategic finance partnership with the sales team to be able to identify the business case and say, this is how much it would cost to staff this or to get the incremental marketing support, to get a channel person on it. And this is the incremental ARR bookings that we could expect and then eventually write into quotas. So that's an example of a really, really fun project. And I've just found that kind of business case building work extremely fulfilling. To answer the second part of your question, what's one thing that is less enjoyable about strategic finance work? Um, I think there's an aspect of kind of the way I think about it is like there's stuff that you want to do and there's stuff that you have to do, right? And strategic finance is interesting because you want people who are super smart and can do this kind of open-ended, ambiguous work that's really interesting, but they also have to do kind of like the basic plumbing, right? Stuff that you don't want to do. Like when we get, the quarter closes and we're doing the BBA and we're trying to understand why, these vendor expenses don't match the budget. And it comes down to some wonky like reconciliation between accrual and cash. Like you need to be willing to go down to that level and understand that nuance. And it can mean like digging through the accounting data and asking questions of like the person who purchased the software. It can be it can be very much a slog. But again, it's the work that we have to do as finance people.
Yeah. Very much aligned with that. I'll kind of quickly give my little spiel. I think, the I love stratfin, similar to everything you said, very cross-functional finance functions. I actually like doing the whole reconciliation thing. I think that's maybe the nerd in me, or the finance nerd in me. One thing that I struggle with Stratfin is our data sanity, which is really being able to create frameworks or thresholds of when we can almost sort of flag when data doesn't make sense. You know, we have our own models that we pull from our data warehouses and that populate our Excel sheets and things like that, or Google Sheets. Um, from all the places I've worked, from Uber to Tala, one thing I always get a little bit frustrated with is how can we get cleaner data? And as we progress and hire, under our stratfin function here at Tala, we also have specific hires just for our data.
Mm-hmm.
Um, that's probably getting into a better spot.
Yep.
I know we're at time, Chris. One last question, just for some of the viewers. What's one really fun fact about you?
Yeah. Fun fact about me: I was born in Honolulu, Hawaii. Grew up on the East Coast. Went to college on the East Coast. Have spent the majority of my career in California in tech. But yeah, still go back there from time to time. And yeah, it's yeah, very special. Honolulu is a very special place to me, and would like to live there someday. But I think even for a remote job, the time zone
Time zone.
is not really doable.
Yeah, I think we've all thought about it, myself included. Cool, Chris. Thank you very much, man. I really appreciate this.